Hi everyone, today we'll be going over accounts 2021 May-June paper 2-1. This is a structured paper and we'll be going over question number 3. This paper is of total 90 marks and we are also given the time limit of 90 minutes. And since question number 3 consists of 15 marks, we will be attempting to solve this question under 15 minutes. So let's get started. We are given C Limited's statement of financial position of two different years. One is of the year ended 31st December 2019 and another one is year ended 31st December 2020. Then we're also given a few information. For the first part, we need to explain two reasons for making a bonus issue of shares. So bonus issue is a type of return on shareholders' investment because shareholder, while investing in a business, expects a certain kind of return, may be cash dividend or a bonus issue, right? So the first reason would be to provide return on shareholders' investment, and the second reason would be to bring the share capital in line with the current net asset value of the company. So the net asset value of the company means the difference between the total assets and the total liabilities. So we need to equalize our share capital with that of the net asset value. All right, let's write those reasons down. The first one was to provide return on shareholders' investments when dividends. So dividends here means the cash dividends cannot be paid due to limited cash. So the difference between cash dividends paid and a bonus issue of shares is that while paying the cash dividends to the shareholders, the cash goes out of the company. But while issuing a bonus share, the cash does not go anywhere outside of the company, right? So that prevents us from going into a limited cash situation. All right. The second one was to bring the share capital in line with the current net assets value of the company by capitalizing. So how do we increase the share capital is that we capitalize all of the reserves. So there are basically two kinds of reserves. So capitalizing the revenue and capital reserves. All right, this concludes the first part. Let's move on to the second one. We need to calculate the number of bonus shares issued on 1st July 2020. So let's have a look at the given information first. So we are given the nominal price of the shares, right? Right here, the company's issued capital consists of ordinary shares of 0.25 each. So that's the nominal price. Then we're told that on 1st July 2020, the directors made a bonus issue of ordinary shares. So we need to calculate how many shares were issued. So we can see that there are no any other issuance of shares. So whatever difference there is between the values of the share capital in the given 2 years, that will be the issuance of bonus shares. So we can clearly see that during the year 2019, the value of the ordinary shares were 1200, whereas it has increased to 1800 for the year ended 2020. So the difference here, we'll first calculate that. So the increase in ordinary share value so that's 1800 minus 1200. So that's just the difference between the values of the ordinary share between those 2 years. So that's 600, but the values are given in thousands. So this is the value of the total bonus shares issued, but we need to calculate the number of bonus shares issued, right? So the number of bonus shares That's going to be the value of bonus shares divided by the nominal rate. So this is a formula indicating that in order to find the number of bonus shares issued, we already have the value of 600,000. So that's going to be our value for the bonus share. And we are given that the nominal rate of those shares are 0.25, which was given in the first information. So the number of bonus shares issued is going to be 2,400,000. This completes the second part. Now let's move on to the third one. We need to prepare the journal entry recording the bonus issue on 1st July 2020, and a narrative is also required. So bonus issue is basically increasing the capital, right? And whenever we increase the capital, it is always recorded on the credit side in a journal entry. So the issued share capital will be on the credit side. Now we just have to look for what will be there on the debit side. So we know that while issuing a bonus share, we always transform the reserves into the capital. So what we said before, we just capitalize our reserves. And here the reserves given are share premium, retained earnings, and revaluation reserve. So we can see that there was share premium of 220 in the year 2019. So we need to transform it into the ordinary shares, right? So that's going to be 220 for the share premiums. Now, the total increment while making a bonus issue was 600. So out of 600, the 220 is given by the share premium. Then the remaining value will be that of 380. And we can see that there are no other options other than retained earnings, which means that from the retained earnings, 380 was transferred into the ordinary shares. So these two will be recorded on the debit side, share premium and the retained earnings, whereas the issued share capital will be recorded on the credit side. Let's do that. So we first have the share premium, and it had the value of 220. Nextly, we have retained earnings. So retained earnings, we had the remaining balance, which is of 380. Then that makes us the total of 600, right? And we issued the share capital of 600. So that's going to be issued share capital on the credit side. This has a balance of 600 as well. So we can see that our journal is balanced now, and we need to write the narrative. So whatever transaction we're recording in this journal entry is that relating to the bonus issue made. So that will be our narration. So we can just write being bonus issue made. That's our narrative. This concludes the third part. Let's move on to the fourth one. We need to identify 3 factors that directors of a company should consider when deciding on the amount of a proposed dividend. So whenever we're talking about dividends, these are paid out of profits. So if a company has no profit, or if a company is going through a loss, then shareholders cannot have any dividend, because dividend is the part of profit that can be distributed to the shareholders in return for their investment in the company. So the very first factor that the directors need to consider is the profit available for distribution. Secondly, if you're talking about cash dividend, then cash needs to be out of the company, right? In order to do so, company needs to have enough cash holdings. And one thing that is very important is that profit is not equals to cash. We can make a profit of maybe 100,000, but then the company's cash situation may be not so good, right? So profit is not always equals to cash. So we also need to consider the cash available for those dividend payments. So second factor would be that. Thirdly, dividends are the return on shareholders' investments, right? So if I'm a shareholder in a company, and if I'm investing a certain portion of my money into their shares, then I will be expecting some sort of returns. So maybe I expect a return of 20% cash dividend, but then the company might give me only 5%, then that does not meet my expectation. So if that is the situation, then the shareholders might not be very supportive of the company's decision, which may result in a conflict between the management and the shareholders. So we need to also consider the shareholders' expectations. That will be our third factor. This concludes the fourth part. Let's move on to the fifth one. So the director of C Limited wished to propose a dividend of 0.01 per share on all shares in issue at 31st December 2020. So we already know that the value of ordinary shares at 31st December 2020 was 1800,000. So let's just write that down. So value of ordinary shares is 1800,000. All right, next, we know that the proposed dividend is of 0.01 per share. So in order to figure the total dividend, we first need to figure out the number of ordinary shares. So we just repeat the process. So number of ordinary shares. So we will just divide the total value, which is 1800,000, by the nominal rate. So nominal rate is 0.25. This gives us the total number of shares of 7,200,000. All right, now we have the total number of shares. In order to figure out the total dividend, we just need to multiply the proposed dividend rate with the number of shares. So proposed dividend is going to be the number of ordinary shares into the proposed dividend rate, which is 0.01. So this gives us the total proposed dividend of 72,000. Alright, this concludes the fifth part as well as this question. If you found this video useful, make sure you hit the like button, make sure you leave a comment below, and make sure you subscribe to the channel and hit the bell icon in order to view more of the contents in the future. Thank you.